Welcome to Charts and Coffee. Great to see everybody. Hope everyone's doing well. Time to caffeinate and dominate. All right, so let's see what we've got on the calendar for today. And jumping on over to the Forex Factory calendar, great way to sort of anchor your day to those potential high impact events. And Forex Factory is a great calendar. Don't get hung up on the Forex part of the Forex Factory calendar, because really what it is a great way to understand all the different data points that are going to be released and do it from a standpoint of understanding what's happening before the bell even rings. In other words, 8:30 data points like we had yesterday with the CPI, but also last week the ECB moved the market at 7:45 in the morning. And unless you're looking at a global calendar, recognizing the importance of non-US data as an impact on futures and metals and currencies, etc., a lot of times you're going to miss really important releases. And again, one of the things that people ask is, okay, Rag, I'm at Forex Factory, now what? So Forex Factory has been around probably at this point for about 20 years. I remember very early on in my Forex career, early 2000s, late 99, early 2000, when Forex became available in the US, using calendars like this. And what's really cool is they make it super easy for you. I mean, if you take a look at this column here, just focus on the red. There's a reason that, 20 years ago, I started calling these things hot zones. And it really came from the little icon on Forex Factory that would show this red high impact event. And that's where high heat hot zones came from. Now there's all sorts of hot zones: economic data releases, central bank events, earnings. There's a lot, options expiration. There's lots of things that could increase the volatility and therefore potentially the risk in the market. So definitely make a pit stop there. Whether you're an equities trader, especially if you're a futures trader, it's really going to keep you from getting blindsided by major events in the markets. All right. So with that being said, let's jump on over to the questions. First up, Peter asks, my view about zero-day expiration options on SPY, for example, long call and V-score low. Is it best to trade it on a 1 or 5 minute? Is such scalping a viable and repeatable strategy? Okay, there's a lot there, so let's unpack that. Monday, Wednesdays, and Fridays. Wednesdays, I'll be on the mic. Mondays and Fridays, I'm in the general chat. And what we do in the Sector Secrets Mastery is, we'll look at the S&P, but we'll choose our own adventure by looking at the S&P futures and executing the idea via calls on the SPY. Now, if you want to go via calls on SPX, that's fine too. But we use the S&P futures as a touchstone, and we'll use the options on SPY, SPX, whatever you'd like, as the way that we execute the idea. So zero date is fine. Monday, Wednesday, Friday for not just SPY, but QQQ as well, Peter, right? So then the next part is, can you go long call and V-score lows? That's one of my, we have 5 pitches, day trading pitches, where I'm focused on an opportunity where I have a high probability of success. This is straight up Ted Williams. This is straight up from Becoming Warren Buffett. This is straight up my preference for, reading books about especially baseball and hitting, right? That I think translates very, very well to trading. Plus, I love baseball. So think about the way Ted Williams would talk about, he knew which pitch that if he could make contact with, would likely give him a better batting average. And I think us traders have that same Moneyball batting average, get on base. I'm not looking to hit home runs because, it's a very binary approach. Home run hitters tend to have usually a higher degree of strikeouts. So I'm just looking to get on base again and again. Having said that, Peter, the thing to remember about the V-score low is it's a very discerning pitch. It's not going to necessarily happen every day, but when you get it in the right environment, that volume standard deviation exhaustion from my V score can be very powerful. And then as far as scalping, look, I don't scalp. I think scalping is just sort of a hyperactive momentum style. Not my cup of tea. It might be somebody else's, but I find it leads to a lot of overtrading in any kind of market. So I'm not an advocate of scalping. And again, I just think scalping is just another way of saying playing momentum in a more aggressive way. So hope that helps. And thanks for the question, Peter. Dan, good morning. Does gold have the juice to get over the 200 around 1809 so we can get to 1834? I would think that'd be, I mean, if we could, that'd be great. Dan, I mean, we have a long position via GLD, and there's a long way to go before we get there. So let's talk about CHOP. And I've got free videos that we've discussed in the past about trading CHOP and about trading these yellow JT multi lower row type markets. We identify the low, we identify the high, we cut it in half. The point of control is doing a fantastic job of confirming that there is also a volume level happening in conjunction with the middle of the range. That's typically your first target. Those of you that took that Russell buy fade that we set up, twice? That midpoint was the first target, right? That first target. After that, sure, I'd love to see the opposite side of the range reached, but that's never T1. And I love that, you're looking at the different levels that we could be dealing with. I don't believe that the 200 is as important in this situation because my propulsion dots are turned off. But to your point, the 200, interestingly enough, and the first of the year anchored VWAP are in a very tight range. And that makes for an important volume and psychological level. I mean, the 200 exponential or simple tends to transcend technical analysis because even folks who wouldn't consider themselves chartists or really avid technicians, they'll know where that 200 is. They'll know when a 20 or 50 is crossing the 200 for that golden cross or that death cross. So that 200 tends to transcend sort of this world of technical analysis, because even traders who wouldn't consider themselves technicians, they're going to be pretty fluent in it. So yes, that VWAP in 200 is happening at that 50% mark. So, you stack all those things happening in that level. That's why that's the first target. And then we'll see if we can move beyond that to the top of the range. So thanks for the question. All right. Next up. Hey there, Dan. You're in Tampa. Oh, very nice. Big fight coming up. It's also live on you. Oh, very cool. Thanks for letting me know, Dan. And Andrew's fighting. Oh, that's fantastic. I'll be thinking of him for sure. Very cool. Best of luck to him, and I hope to catch it. Thanks, Dan. Yeah, I'm a fight fan. All right. What are my thoughts on Wells Fargo? All right. So Wells Fargo is going to be part of a larger conversation around the XLF. So anytime we have an individual stock, we're going to take it out to the ETF, out to the sector level. If there's anything that's helped me since '08 really get a much better grasp of why the indices are moving and why specific individual stocks are moving, it is the ETF factor, right? That ETF factor is such a needle mover because understanding the impact of passive investing since '08 has never been more important. So having said that, I want to know about relative outperformance. And that means, are we seeing the individual stock behaving in a way that's stronger than XLF? Is it at least in sync with XLF? And that's where, when you look at JP Morgan XLF, when you look at Wells Fargo XLF, I don't want to wander too far away from the question, JMO, but I would be cautious. I'm not bearish, but I would be cautious. You want to see as much synchronicity. Great Police album, by the way. You want to see as much synchronicity as possible between the XLF and Wells Fargo. And I'm not sure that I love Love what I'm seeing here. When it comes to XLF, I'll tell you what, I've got my eye on Morgan, Bowman, SPGI. mean, there are some interesting names in that group. So I would say I'd probably personally pass on Wells, but that grouping, JMO, is a good one to keep an eye on. So love it. Desert Dog asks, please explain the M pattern. So M is just something that really looks like a double top. It's going to be distribution typically, and you're usually going to have yellow lower row JT multi. So, I brought up the M pattern in yesterday's free video. So if you haven't checked it out, back at the Simpler Trading YouTube channel, yesterday, Tuesday's free video was, on Monday I talked about, yes, buy the dip. Yesterday I said, look, when do we not buy the dip? Because a lot of folks have been asking, yes, Rog, we get it. You've been saying this all year. It's been working, right? I'm not here to be right. I'm here to make money. So I know that might seem like a funny thing to say, but a lot of traders sort of lose their path when the road forks and there's this ego of being right and calling trades before they even happen. Tops are very popular, sucker punch for such things. And then there's the whole reaction to what the markets are doing. This is the latter. We are counter punchers, right? Sticking with the fight theme there, Dan. So YM could be an interesting M in that we might get a double top with the yellow lower row of the JT multi, which could set up ultimately a breakdown. Now, a 1, 2, 3 and an M are pretty similar. A 1, 2, 3, the second peak just cannot exceed the swing high, right? This has to be a lower high. And an M, well, this could be a higher high, this could be a lower high. They just have to be mostly in line with one another. But either way, they're very similar. And so that's what that is, Desert Dog. And we were talking about that specifically on the possibility that if we are going to see movement to the downside, how does that start? It doesn't happen in a single candle. It doesn't happen suddenly overnight. We went from an uptrend to a downtrend. Remember, a single candle can break a trend, but it cannot make a trend. So the evolution of a trend to chop to a downtrend is an evolution. It does take some time. And if we do end up rolling over, it's not going to be when you wake up and all of a sudden 9:30, you're thinking, looking at the NASDAQ, oh my gosh, when did this downtrend form? It won't be that fast. Okay. So thanks for the question. All right. Next up is Ashlyn asks about IGV. Software. Okay. So the trend has been double green. Yes. A lot of tech has been quite strong, right? Pull back to the wave with a blue grab. Top holdings show similar structure. Any concern? So what I would say is take a look at the JT multi. Blue grab candles and a yellow JT multi is nothing to necessarily be concerned about. But once we have the yellow lower row, for sure, and if we were to get more than two, well, I should say two or more red grab candles, then we have a problem. Then there's an issue. So right now, I'd say no concern. And if you want an even more sensitive read on that, keep an eye on the upper row on the JT multi, because if it goes red over yellow, that's something to watch. But if it stays yellow over yellow and we have no red grab candles, I would not be necessarily concerned. I would also keep an eye on the 55 exponential here. See the 55 right there. Keep an eye on that one too. But I'd prefer that we stay inside the wave, which we seem to be doing a pretty admirable job of on the previous pullbacks. Okay, so that's what's going on there on IGV. And if you happen to see a relative outperformer, in this case, Ashlyn, it would be an individual stock that's still double green on the JT multi. Okay. All right. Home Depot, Miles. Okay. So Home Depot is interesting because it's weighted heavily within the Dow. It's weighted within the XLY. It's actually third after Tesla, after Amazon and Tesla. So it's weighted in the DIA. It's weighted within the XLY. It's weighted within ITB and XHB. So it's part of three pretty different narratives, pretty different groups. So Home Depot exists in a prominent way across all those narratives. So in this case, I just mentioned 4 ETFs. So the question becomes, which one is it moving for the most part in sympathy with? That's going to be what you want to sync up sort of Home Depot to. So, you start there at the passive investing level. And then, clearly you want to gauge Home Depot's, your interest in Home Depot, on its own merit, right? And, it has been choppy. It's moving higher, which is cool. Good for Home Depot. Interesting little continuation, 1, 2, 3 here, by the way. And if you don't know what these are, the Dow 1, 2, 3 patterns, check out the Countdown Trader or even Google Countdown Trader Dow 1, 2, 3. If you just Google Countdown Trader Dow 1, 2, 3, you will see that we have a number of write-ups over at the Countdown Trader blog on this specific pattern. Okay. Someone in the free video had a comment saying, I went and Googled Dow 1, 2, 3, and I found a video of yours from 13 years ago. This is a very old pattern. It's a pattern that I've been using for a really long time. And like I said, we've got brand new write-ups on it, brand new videos on it over at Countdown Trader. So just Google Countdown Trader and Dow 1, 2, 3, and you'll get a number of hits on the Google. All right. So what to do with Home Depot now? All right. This is going to be an issue in here. Darvis high, previous high, getting really close to that +2 standard deviation where we have exhausted before. I would be careful. I mean, I certainly would not engage in Home Depot up here, but I will say I'm also not really looking at Home Depot that closely because it's a sideways market. Yes, I am expecting higher highs because the trend that preceded the yellow was up. So our bullish bias is intact. We just don't have a trend. So I hope that makes sense. It's just not something that would be on my radar, but generally speaking, I would be bullish. Just be aware of the previous high, be aware of the Darvis level here, and then be aware of Home Depot is going to move with the tide. Which one of the tides is it moving with, and how is that tide behaving? Because that's going to influence whether or not Home Depot has a shot of taking out these higher highs or taking out the highs and moving to higher highs. And then in that scan, here's what's really cool about that scan, Miles, is you might discover other names that are moving in an even better way, relative outperformance to even Home Depot, better structure. As far as crude goes, it's still the same conversation. The move that we're seeing now, great, that's a momentum move, but the move that preceded it was dominated by blue grab candles that pretty much screamed, hey, this is a momentum breakout environment. So the blue grab, GRAB, sets up the momentum breakout, but it also sets up what I like to call, we talked about this the other day, the fade, right? The fade and front run. In other words, I know that my directional bias is up because preceding the yellow was the double green. So I know that the path of least resistance is likely higher. And so that allows me, when we get a market that's consolidating or even congesting, but in this case it was consolidating, look at all the blue grab candles, look at the narrow range. I can cut the range in half, be a buyer at the lower end of the range, and front run what I feel will be an eventual breakout. Crude was this way, gold was this way, same idea. Andres asks, why is NG going parabolic? I mean, and I'm not trying to be funny. More buying interest than selling interest. It's the whole reason anything moves. I know a lot of people say, well, more buyers than sellers, which is kind of true, but it's more buying activity than selling interest. That's the whole reason anything moves. Um, so when that buying interest is so overwhelming that buyers will literally trip over each other to get long a market, and of course there's a fundamental basis behind it, etc. And a lot of that was why we like the long in here. This is where we're long from. This has been a tremendous run. But, when you look at a lot of the supply narratives, and then you look at the structure of the market, I mean, this is clearly a buying market. It's not a shorting market. And then the fact that it's now gone parabolic really accelerated, that's just a matter of the psychology around this particular commodity. And a lot of it is more demand and falling supply. And when it comes to commodities, that's very often as rudimentary as it gets. We can get very sophisticated about what's happening with Germany and Russia and output in the US and even the hurricane. We can talk about all that, but at the end of the day, double green, pull back, and now it's gone accelerated. So what we're doing is just trailing the stop on the long UNG calls. And I still have a couple of NG futures contracts. This is quickly becoming probably my biggest trade of the year. It was copper, and now it's definitely natural gas. Uranium and CCJ, URA and CCJ were up there as well, but I think it's quickly being replaced by this unbelievable move in natural gas. All right, so gang, I ran over a little bit. Thanks as always for being a part of the Charts and Coffee pre-game show. I'll see you all tomorrow. I'm going to head on over into the Sector Secrets. We get together each and every Wednesday for some live trading, Q&A, a little day trading. So all the things that I love to do. I'll see you all in tomorrow's show, or I'll see you all later on this week in one of our rooms. Okay. All right. Be good to each other. I'll talk with you soon.